The Wemix token is going up and down aggressively. I've made two other videos on Wemix, one of them discussing the fundamentals, another one discussing the relative valuation of Wemix to Bitcoin and Ethereum and in general to the overall altcoin market. If you haven't yet caught up on the drama around Wemix, how it was delisted, how then there was a lawsuit around the outstanding supply of the tokens, how then a token burn mechanism got introduced. If you don't know anything about this, check out that video here, it's on this channel. If you're wondering why there are those violent moves in the token, feel free to check out the technical analysis. Relative valuation to Bitcoin over here, relative valuation to Ethereum over here. We've got a relatively strong plateau, a relatively strong support, and now comes the point of truth where this is all going. Are we going to break that resistance or are we going further down? Now this video is different. In this video I want to discuss this chart over here. This is a chart that describes 398 backtests. A backtest is a simulation of buying and selling the Wemix token. So we want to ride those waves. We want to buy low and sell high as everybody else, but we want to do this in a methodical way. We want to find out mathematically what would have been a good approach in the past. And we really don't need to overcomplicate things. We simply just have to measure. We can take moving averages, for example, here. This is a 30-day simple moving average, and we buy whenever the price is above, and we bet on falling prices whenever the price is below the moving average, right? So this is the rally that we would be taking, and this is the time where we'll be betting on falling prices. Looks like a reasonable approach. The only question is, what's the best moving average? Is it really 30-day? Or is it maybe 50-day? Or should we further increase the duration? What's the best moving average duration? In the past, at least, giving us the best signals for Wemix. And this graph over here shows a summary of all of those backtests, of all of those simulations. Now, what I like about the strategy is that in general, this seems to have worked quite nicely. Buying and holding would have given us 70% per annum, but look at these spikes. Look at how much outperformance per annum we get when using any of those moving averages. In turquoise, we've got the simple moving average. In red, we've got the exponential moving average. Pretty much all of this outperforms buying and holding. That's here in black. And this kind of a shape in that backtest is pretty unique to Wemix. Normally we see more smooth curves like this one over here. Seeing these spikes is definitely unique. And it might point towards potential price manipulation, because really we don't see this in any other asset. Now let me show you a few more details around the backtest before we dive into pointing this on the chart. The data starts in November of 2020 all the way to today. Here are the results in numerical form. We've got 0.2% trading fees. And of course we buy whenever we are above, but we also short whenever we are below. And so when we look, for example, at the result for this moving average here, right? The 4-day moving average. This is how that then looks like on a chart. In white is the Wemix price. We can barely see it. And in turquoise is the backtested performance. On a logarithmic scale, we can see this slightly better, right? Look at this. A very constant outperformance of the backtest versus buying and holding the token. Here, the horizontal lines are 10x's from one another, a logarithmic scale. So let's plot some of those moving averages. Historically, these worked really well. So the 4-day, very short duration. Usually we don't have that short of a duration working that well. So this would be the most active of the bunch. If you want to plot this yourself, right, simply just go to tradingview.com, enter /, enter moving average. Click on that, then double click on the line, change the length here to 4 and make sure that you've got day selected here in the interval selector. So this would be the best approach historically. Very active, potentially also needs to be automated. But make sure when you automate this that you only look at the price at the end of the day. So UTC time zone is the cutoff here, and we only buy and sell whenever the price closes the day below or above the moving average. We ignore whatever happens within the day, right? We don't look at intraday movements. We only look at the price at the end of the day. This is how the backtest is constructed. So this is the first moving average. So we would be turning bearish once we are below $1.87 right now. But let's look at the second very well working moving average over here, the 19-day. Let's plot this actually together. Let's have both of them on the chart. This is the 19-day, and we can see this is further away from the price, and that's currently at $1.28. Didn't work as well as the 4-day, but almost as well. So if you want to avoid active trading that much, The 19-day does a pretty good job as well. Very nicely segregating bull from bear market. Currently, we would still be staying bullish even if Wemix saw a drop of 36%. But of course, this gap is closing by the day as we simply go sideways. One more moving average, one longer duration. Let's maybe take one over here, 45-day, simply to have a full picture. That's how that looks like, right? Way further away from everything, way less signals, but historically worked very well to time those ups and downs. The exponential moving averages here in red, they tended to underperform the simple moving averages, so I'm not going to plot those. Now I find the result here very fascinating. This tells me to a degree that the price is manipulated. Maybe the burning mechanism is somewhat linked to the current price action, and maybe the price gets supported once it drops a certain point, or when it doesn't rise for enough. These kinds of spikes in the moving average returns are not normal. And the outperformance that we see using that backtest is massive relative to just buying and holding the token. So of course the fundamentals are important. That's why I made this very first video. And the situation of the entire crypto market obviously has a huge impact as well. But the idiosyncratic movements of Wemix seem to be very important as well. Wemix does have its own life. And these are massive moves, right? Top to bottom, minus 99%. This rally, plus 850%. And just the recent rally that started in September, already plus 260%. So you really want to ride those waves. You simply don't want to just buy and hold this. Buying and holding definitely underperforms an active approach here. Now I've made a lot of such backtests, and I also do backtests on request. There's the premium membership where there's currently roughly 100 people in there. And whenever somebody wants a backtest on a token, I simply just provide the results. I also provide the Excel sheet that I used in order to come to those results. There's the premium website where you can download the Excel sheets. And that's also the place where you can find all the prior results, and where there's a Telegram group where you can ask me any questions directly. I also support everybody one-on-one there. So feel free to check it out. Link is down below. There's also a money back guarantee in case you don't like it. See you in the next video. Bye-bye.